Hey, welcome to Waking Up to Win.
I'm Annie.
And I'm Chad.
And this is your space for real estate motivation, mindset, and the kind of coaching that pushes you from stuck to a top producer.
We are all about helping agents work on their business, not just run ragged in it.
And we believe there is more than enough room at the top for everyone to win.
Let's dive in.
All
Welcome
right.
back, Annie.
Thanks, Chad.
You had a nice little staycation.
I did.
Just a few days over the weekend, long weekend.
Yes, and I'm going to clarify it was not a staycation. It was unpacking rocks from my backpack.
Say
Station.
more. Station? Asian.
Asian. I know after it came out.
It was a rock purgation.
It was a rock purging adventure.
Say more.
I will.
Elaborate.
So my good friend Mel Robbins.
Mm-hmm. Does Mel Robbins know she's your good friend?
She does. I call her on the regular.
Okay, good.
So my good friend Mel.
That was sarcasm, just in case anybody's watching it.
Was
pick
it?
up on that.
Was it? My good friend Mel was telling me about one of the reasons that you constantly feel stressed and can't like settle or just like enjoy your life is because you're carrying around this backpack full of rocks. And these rocks are things that you need to do.
Mental distraction.
And they're things you need to do that take 5 or 10 minutes, but you just don't get to them. So you're always thinking about like, oh, I need to schedule that appointment with the doctor. Oh, I need to get my teeth cleaned. Oh, I forgot, this needs done, or the dog needs to go to the groomer or whatever. They're just little things that you need to do. They're not boulders. They're not clean out the garage. They're not move your furniture, from one lake house to your new house. Those are like boulders, but these are just little rocks. And so when you get them done, you can feel lighter and more productive. And I'm going to tell you, I keep the spreadsheet of rocks, but I renamed it Rocks now. It used to be called Things to Do. Now I call it Rocks. And I have it list, my personal, my dance studio, my realty, my Mather. And I just keep this running list of rocks and things like get my passport updated. It's literally been on there for 3 years. I got that done last week.
Hey.
I know. So so I'm super excited. And she does recommend that I do this once a quarter and the rest of the world too. I just pretend that she's talking to me directly.
I get it. I totally get it.
So
I'm the same way with Simon Sinek.
Yeah.
He's my best friend when I need some.
Yeah, see, he's like,
life
he's
guidance.
your friend, Mel's mine.
Oh, no, yeah. Yeah, I get it.
So anyway, it was fabulous. I did it for, like you said, a long weekend. To be honest, I could probably go another 2 or 3 days and really feel caught up. But even this morning, I was so efficient and organized coming in here with little things that needed to be done.
Yeah.
So yeah, feels good. But I'm back.
Sweet.
Did you miss me?
I did.
Let's try that again. Did you miss me?
I did.
Thanks.
Yes, I did. Very much so. Cool. Well, I feel like that's so how often are you supposed to do this?
Once a quarter. It's called the Ultimate Admin Day, if you want to look it up.
Do you do this for your business too, or just your personal
It's
life?
any of those any little tasks that you could just get done that you don't have to get done. They're not keeping you from living your life or doing your job, but they just need to be done.
So like would selling a jet ski be one of those, or is that a boulder?
I think putting the ad up to sell the jet ski would qualify.
As a rock?
Yeah.
My dad did that.
I saw that, but I was very shocked at the price.
Oh, okay. I don't know why. Why are you shocked at the price?
Because you paid a lot more than that.
I know, but I've had
Did
it
they
for
really
4
go?
years.
Oh, has it been 4 years?
Well, yeah, I bought it in 2021.
Oh, yeah. Wow.
It's been 5 years. Yeah, because...
But that's exactly the kind of thing. Or like canceling subscriptions, unsubscribing to emails. Those are all rocks. If it's something that takes your time every day and you're always like, man, I should unsubscribe to that, but you don't do it. Mm-hmm. Calling and getting your insurance cheaper. Just things that live in your head.
I feel like... Are you ready for my inspirational quote?
I am.
Okay. Comes from a very prominent company, and it goes to what you're saying, I think. It's the whole vibe.
Make the connection.
Same thing.
Okay.
But just do it.
Nike.
Just
That's a fun game
do
to play. Yeah, it's true.
Like once a quarter, just do it.
Well, and it's really every day. I mean, and she, and that's
Yeah,
that's
you
part of
boil
the
it down once you get overwhelmed or whatever,
because as
right?
I'm on this journey of unpacking rocks and simplifying my life and minimalizing my belongings and my possessions, one of those things, just do it, is also only touch everything once. Don't put your jacket on the couch. Put your jacket in the closet.
Right.
Don't put your mail on the counter. Put your
Oh my
mail
God,
on
that
your
drives me
desk.
crazy. And I can't remember whether it was Mel Robbins. It might have been Mel Robbins. But so I struggle with things not being in their place. Like, so it is very much like my brain, everything has a place and everything goes there or whatever. And when people don't put it back in the place, I'm like, I don't understand that.
Right.
Why do you not just put it back in its home? Like you were, Mikey, notorious for this. And I'm going to give you the solution that we came up with that works really well for us. But he's polar opposite. Like if nothing has a place. Everything's place is the closest place or the closest hole or the closest cabinet or the closest whatever where it's not visible when you walk in the room. So like he'll come in and he just drops whatever he's working on or has in his hand just wherever in the house. And then I'm like, some nights I can't go to sleep until I put everything away. Like
Yeah.
it's just, it bothers me, right? And so I created what I call drop zones in every room. So like his stuff that he drops on the buffet or on the table or leaves on the kitchen counter or whatever. I know your daughter's infamous for this too. We used to call it
The Katie Trail.
right? The Katie Trail through your house because she literally would get home and he does the same thing.
Right.
Like he
Kick
gets
off your
home
shoes, lay down
and
your purse.
he takes his jacket off and he throws it on the chair, and then he'll go in the next room and he takes his shoes off and he's sits down on the couch and there his shoes lay. This morning when I woke up, his damn flip-flops were on the floor in front of the couch. I'm like, you had to walk to the bedroom to go to bed, by the closet where the shoes go.
Yeah.
And there they still are. Like, so anyways, neither here nor there. That's just how he is. I'm not trying to be angry or judgmental or any of those things, but creating the drop. No, it's just my internal, it's all about me. It really has nothing to do with him. I don't want to, so, but the thing that I created, and I think it was a Mel Robbins suggestion, was drop zones. So now he has a massive jar or whatever that's part of the decor in the room where he can just throw stuff in it. And then when he's looking for something that he can't find, he knows to check the jars in all the rooms.
Does it get to live there forever?
It lives there forever.
Okay. Because otherwise it's became a rock that you have to empty. So
nope,
it's okay.
It lives there forever. It's fine living there forever. It's stuff that like little bitty screwdrivers or fingernail clippers or like all that little crap, that junk. So I have a junk jar or a junk drawer.
As long as it doesn't have to get put away
in
later.
every room, right? And then if I'm looking for something, I know to go through because I'm like, there are a lot of times where I get frustrated because I also have this weird ability to remember where everything is that I use almost instantly. So like, and I pick up on where his stuff is, so he'll constantly ask me, where are my keys? I've lost my keys. I can't find my keys. And I'm like, they're under that stack of shit over there with the, and I had like that.
I don't know how people live like that.
I don't either, but I have that too, because there was like, when I was working at the dance studio, you would go, we had this thing, and I'm like, it's in that back closet underneath of the yellow tub with the blue lid, and then it's in a basket inside of that tub next to a da-da-da-da-da. Like, I don't know why my brain remembers this shit, but it does. And so, anyways, it's been helpful because then I can just go looking for the drop zones too, and I don't have to go through every drawer in the house and every cabinet in the house looking for whatever it is I'm looking for.
Well, we did it for Katie, but now I'm rethinking it because I was helping her with 2 little kids and getting organized, and she has baskets in every room. But then at the end of the day, you have to empty the basket, so it does kind of become a rock if you don't do it. So you have to be careful, but it's that whole touch it once.
Well, and I will say, so sometimes the jars get full. And then, so when the jar is full, I do go through it.
Yeah.
But like, to me, that's not really a rock. It's just like if I'm looking for something and I get to the jar and it's full, then I go through it and I like move things back to the room that they're most used in and spread the stuff back out between the jars. Because at the end of the day, the stuff that's in the jars in each room is always the same stuff. Like it's just in a different room.
Yeah, she just
And
says
so-
that just don't add more rocks. Like once you start emptying
Yeah.
your rocks, don't add more rocks. So as long as it's not a rock that you have to every
That
day
doesn't
do.
bother me, no.
Yeah.
Mm-mm.
Yeah. So
Very rarely. They're big jars though. Like the one in our bedroom. The one in our bedroom on our dresser.
So they're
is
boulders.
Like that tall and that big around. But it does, I mean, it just has everything, random, all the random junk. You know, there's a reason why people have junk drawers.
It's true. Everybody has a junk
Yeah.
drawer.
You always got stuff
I
that
like
you
my junk
don't
drawers,
know
but
where to go.
I hired our friend Catherine to help me organize, and so I don't have junk drawers anymore because everything has a place. But the last part of don't add any more rocks is if it takes less than 2 minutes, do it now. Mm-hmm. And so that's a hard one. But that was,
I do not struggle with that at all. I actually do too much now and don't do the things that are important.
Yeah.
So I can get trapped in that one.
But it's like if somebody says, hey, Chad, can you send me that spreadsheet after the meeting? And you do this. You're like, no, I'll just send it to you now because it's going to take me 30 seconds. Why do I need to write it down and make it a rock?
Of course I do. Like I said, I compulsively do those things.
So I'm
Sometimes
trying to do...
I say it's going to take me 2 minutes and then I end up spending 2 hours
That's
working
the
on
problem.
it.
You go down the rabbit hole. Yeah, no.
Yep.
She says, don't do that.
Oh, well, a lot easier said than done, Mel. A lot easier said than done.
Oh, so there
Anyways.
you go. And now you know.
Oh, what happened this week? Oh, we had that damn
We just talked
listing.
about mine.
We had that damn listing with that. FHA. Let's
Yeah.
talk about FHA loans
Okay.
today. What you need to know from both sides of the aisle.
Okay.
Well, that's the question. What do I need to know from both sides of the aisle? Let's start on which side of the aisle you want to start on, buyer or seller? Or both. We could just start with the facts and go through it both. Yeah, FHA is a different kind of beast. So first of all, I was curious because I hear both sides of this argument. Does it definitely mean something when a buyer has an FHA contingency in their contract? Like, what does that definitely tell you as the seller about the buyer, if anything?
What it definitely tells me about the buyer, if I'm the seller, is that they are getting a government-backed loan, and so there's probably going to be some stricter guidelines than just a regular conventional loan because they're going to protect their liability, protect their asset. So,
well, differentiate for me because I think a lot of people think all loans are government-backed because of Fannie and Freddie,
right?
Which are government. They're not. Fannie and Freddie are not even government entities. They're just in a conservatorship with the government, which means that the government has regulatory power over them. But those companies are not owned by the government. So it's not the government's money that's insuring those loans. Whereas an FHA loan is insured directly by the government.
Yeah, and we should probably even go back to what does FHA stand for? What is the acronym?
Federal Housing Administration?
Right. And so
it was
many
a trick question.
No. But so many clients I find think it stands for first time home buyers. They think
that's
FHA
funny.
is for first time home. That's what they put. And so
But there's no B, it's an A on the end.
I know, but
okay.
I'm just telling you, I am telling you that is what
Interesting.
more than not think that.
Well, I will tell you, a lot of first-time home buyers get FHA loans.
Right. So somewhere that became.
But why do first-time home buyers get FHA loans? Because that's the point that when I hear an FHA loan, that's the reason that you take an FHA
And
loan.
I don't know what all the reasons would be, but for whatever reason, and I know that's also changed, but maybe they're not quite as qualified. They've got a little bit more debt to income ratio. They haven't.
Yeah.
They haven't established credit yet.
They can do a lower credit score. So if their credit score
Right.
is lower, FHA will take them, whereas Fannie and Freddie won't. They can do a lower down payment, although the conventional down payments have dropped since
Right.
FHA
It's like a
came
0.5%
about.
difference.
But it's 3.5% down versus 5%, which is a typical minimum on a conventional. You can only get 3% down if you're a first-time home buyer. So if you have really good credit and you're a first-time home buyer, you would be at and no money in the bank, which most first-time home buyers do not have any money in the bank. They're going to be at a 3% down payment on a conventional loan. The only reason they would go FHA is if their credit score was lower than the cap. That's the only difference between those two programs. So FHA does mean most likely, and I say most likely because only if your lender doesn't know what they're doing would they put you in an FHA loan when you qualify for a conventional
No,
3% down.
we've actually had a couple of those where our lender and it was a better interest rate, and I'm not going to be able to tell you why, but I do know that we were writing
niche. I know what you're talking about.
we were writing offers and not wanting to go FHA because it means something to a seller sometimes because it comes with those extra guidelines, but for the buyer it was a better loan.
Yeah. Because the FHA is owned by the government, run by the government, funded by the government, they don't change their rate as fast as Fannie and Freddie do. So when you're in a position where the rate's at the bottom and rates are climbing, that bottom rate that's FHA is set at stays longer than a conventional. So but it's rare.
But we had it twice last year, and it was like then you got to negotiate as the buyer's agent.
Right.
Yeah.
Right.
So,
but most of the time,
I don't know why that was so loud in my ear.
FHA is lower credit score.
Okay.
And most first-time home buyer assistance programs, at least in Missouri, require you to go with an FHA loan. So that is something to add to the story, right? What that means for a seller and what that means for a buyer.
So I think we had a big learning, this last client that we had with an FHA. Quite a few learnings with it, but
yeah.
You want to share the big one?
Well, I think the big one is that when you take an FHA loan as a seller, you need to understand that up until the day of closing, that buyer can walk away if the property doesn't appraise for the purchase price. And there's nothing you can do to force them to, even if they're outside of their loan contingency, even if they're outside of their title survey contingency, whatever it is, right? So yes, that is the aha, is that the FHA, a mandatory clause, which is standard across the entire country because it's written by the FHA, the Federal Housing Administration. I was going to call it Fair Housing Administration. But the Federal Housing Administration or the FHA. So that's the truth across. It's, the amendatory clause is a clause that's written to supersede any other clause in any contract you put it in.
Yeah, it's the super contingency.
Yes, it is the contingency that lasts until the day of close. So you cannot force a buyer or penalize a buyer. So you can't keep their earnest money. You can't do any of that because the property did not appraise for the value.
Right.
So yeah, I don't think a lot of people know that.
No, I think that was
yeah. It doesn't happen very often.
That is exactly the point, is it does not happen very often.
No, and in this particular situation that we had this week, there were 3 other contingencies that they blew prior to getting to the finish line.
It was, and it's more detailed than that.
Didn't have an FHA appraisal in hand when they tried to invoke the FHA appraisal contingency. So from the seller side, know that you can't, but from the buyer's side, know that you have to actually get the appraisal done before close. So if you don't have an appraisal in hand and you have failed to order that, pay for it, do all of the things necessary to get that, then the contingency is null and void because it's the contingency is conditioned upon receiving that report.
And I think that most lenders still work hard to get that appraisal done.
I do.
In the loan contingency time frame. I mean, on all the deals, it has never come up for us.
Well, because...
a day before closing.
Yes, because the process of loan underwriting, that causes that, right? So the appraisal is separate from the buyer's ability to obtain a loan too.
Correct.
That's what you're calling a loan contingency, right?
Right.
So we could have a loan contingency in a sale contract doesn't necessarily mean the sale's contingent on any sort of appraisal.
Right.
The loan contingency is simply the buyer's ability to obtain a loan for terms that they lay out in the contract. So whatever type of loan they're planning on. So they're not tied together. Those two things are never tied together.
We've actually had someone with a conventional loan not add the appraisal writer because the agent just forgot.
And then they came back and said,
and then
it didn't appraise. You need to come down. Oh, no, we don't.
Sorry.
Yeah. So there was that.
Yeah.
So and the whole frustration was caused because people don't know these things.
No, so then it does go back to when you have the seller and you have multiple offers
it doesn't make a difference.
and you have a conventional loan versus an FHA, and one may be a higher price, but that's where it's your job to explain to the seller, here's what it means. I'm not saying take it or don't take it. This is what it means. Yeah. And all of a sudden, if you're selling your house for $75,000 more than we think it's going to appraise for, that's a risk you run.
Well, and I also think that is it. What you just said is really, for me, the point that needs to be driven home to everybody is, as a realtor, you have to be able to discern between opinion and fact. And you have to be able to state the facts to the other side, and then what opinion your client has formed based on those facts,
right?
And leave your own thoughts
can we
out
add,
of it.
Can we add a third leg to that little stool you just made and make it emotion?
Yeah. That's
even if they are facts.
They
are just facts. You don't have to be emotional about the facts.
No, they're just facts. You don't have to allow your emotions to control. I know that this business can be up and down, and it's hard for somebody who's in a down that has a client under contract, and when that situation comes up, the panic takes over on the realtor side, and they're fighting tooth and nail to keep the deal together and be right. And it's like, your job is not to keep the deal. That's not your job. No. So why are you saying these things?
Usually it's because you haven't done what you needed to do prior to of explaining to Mr. or Mrs. Seller,
or a Mr. or Mrs. Buyer.
We did not sell your house today. We took a contract. The buyer may or may not buy your house.
Right.
Here's all the reasons they may not buy it. Here's all the things they get to do before they decide. And now with this FHA loan, they may not decide until the day before.
Right.
Problem is that sellers get surprised by it.
They do get surprised
because they thought they already sold their house. They're packing.
And we had, we had the seller's side in this particular situation that we're talking about, and I'll just tell the whole story. So the listing's up. We take an FHA contract. Is a 45-day close, which is pretty typical for FHA because, again, there's a couple extra steps when the government's actually cutting the check. So we get into it. All of the standard contingencies are in the contract. When I say standard contingencies, I'm talking about for St. Louis metro area. We use standardized forms from the association. So the earnest money goes down. We have a title survey contingency, 25 days. We have inspection contingency, 10 days. We have, on and on. The loan contingency was set for 30 days. And then they had attached an FHA appraisal contingency or an FHA contingency. So we start going down the road. They get to title survey, and 5 days later is loan commitment. So again, is the property what you think you have contracted to purchase? That's what the point of a title survey contingency is. And then the second one is the buyer qualified to get an FHA loan? And then the FHA appraisal is really just, does the FHA believe that it's worth making a loan on?
Right.
That's the contingency, right? So 1, 2, 3 contingencies. So we go through and we start. We get a call after loan commitment date, and we knew this was going to happen. And this is something else that I frequently get frustrated with is knew it was going to happen because as of loan contingency date, there had been no appraisal scheduled. There had been no visits. There had been no communication. There hadn't been no anything from the buyer's side. And a lot of people would say, well, and this particular person said this, well, you didn't ask. It's not my job to ask. I represent the seller. It's not the seller's job to follow up on the buyer's contingencies. It's the buyer's job to execute them by the contingency deadline date, or you lose your right to invoke the contingency. Either way makes no difference to a seller.
Right.
So why would we call and follow up on you? You have a job. You're getting paid commission. By the way, in this particular instance, by the seller.
Right.
So, it's aggravating. But anyway, so the loan contingency comes and goes. And a week or so later, we get a call. We're not ready yet. We want to extend. Well, they need 3.5 more weeks to get their act together or whatever. Mind you, we're past all of the contingencies at this point. So we extend the closing date, but we extend no contingencies at all. So the only contingency left in play is the FHA one. And so we get a note couple of weeks later, about a week out from close, from the listing agent, says the property didn't appraise under the FHA. And I'm like, great. FHA contingency says you send the appraisal report over. If we can verify that it didn't appraise, we sign the release, you get your earnest money back, or we come down to the appraisal price and we proceed to closing. Those are the options. So she sends the appraisal over. It's not for the property.
Well, even before that, she didn't send the appraisal over. She said,
Well, she
I'll
argued
have
with
to,
us.
I don't know that my buyer wants me to share that.
Okay, well, go ask your buyer and have them read the letter that they signed, and you'll know that you need to send it over.
Right.
It's not an option. It's
Right.
required. It's kind of like inspection notice. You cannot send an inspection notice opening a negotiation or terminating a contract without providing the report that you paid for to prove that you did an inspection. Yeah. Same thing over here. We get the appraisal on the seller's side to prove that you did and you're not just lying to us. Anyways, so she finally sends it over and it's not for the property.
Right.
That we're all thinking that we're under contract. And it's significantly under what we have the purchase price at. So, I was like, something's wrong with this. So I go and do a research. The acreage is completely off. And so I call her and I go, I don't know why this acreage is so far off, but this appraisal is not accurate. It's not for our property. I don't know what the appraiser appraised or whatever. I verbally at that point, I said, we're selling X acres and you're buying X acres. She agreed with me, yada, yada, yada. So she's like, well, I don't know. And I'm like, okay, well, I'll figure it out. So I got, all right, this is how this is going to go down. Okay. So I get off the phone, I figure it out. Turns out when the buyer's agent wrote the offer, despite us putting an addendum and agent remarks in our MLS listing that says this sale includes 5 parcels, she only wrote that contract for 1 parcel. So that's what caused the discrepancy. Now, she then starts to argue that the appraisal counts because she can't invoke any other contingencies, and our seller's not willing to come down $75,000 from his list price. Mainly because if the whole property was included, the property would have appraised for purchase price.
Or it got closer.
Gotten a lot closer. And so, we start going back and forth, and she's arguing on and on and on. And I didn't say this to her, but what I wanted to say that was like, no, you're not getting the earnest money back. If you want to make it difficult, fine, we can make it difficult. That's on you. It can sit at the title company for 12 months, and then my seller can go get it from the state. Or he can choose to sue your buyer at any point, whatever. I don't care what happens to the earnest money after close, but there's no way, in my opinion, you have not, in my real estate professional opinion, executed any of the contingencies that we're trained to execute. So you're not, I can't.
Right. She just sent a mutual release for no reason.
I can't ethically advise my seller to sign this. And he doesn't want to sign it. He's not even asking me to sign it. He's telling me, no, I'm not signing it. She screwed me. We gave her an extra 3 weeks and now she's doing this and the appraisal isn't even there. And how did that even happen? And so I had to answer that question to the seller is, how did this happen? And the answer to that question is, when the buyer submitted their title order to the title company, they got back a title commitment. They didn't read that title commitment, because if they had read that title commitment, they would have known that the title policy, which is provided to the lender who provides it to the appraiser, and that's what the appraisal is run off in conjunction with the sale contract, wasn't what we all thought we were buying.
Right.
And you didn't catch that. You didn't submit a title notice within the 25-day title contingency. And that's really your problem here. And so, no, you're not invoking your title contingency after the fact. You can't. You're past that. Your buyer lost their earnest money because you didn't do your job. That's what I wanted to say to that realtor. But I didn't, because it's not my realtor. And then her lender was something else too, but I think that's going to come up.
I think it's coming up in the what the floop.
Oh my God, the lender he was way calmer and nicer, I think, than the
well, that
agent,
was the other thing,
but,
right?
Oh, the decorum in the conversation.
I had a conversation with the broker on the other side, and and maybe the realtor. I'm not even sure at one point because I heard the conversation. But yeah, it was definitely, if I talk louder, faster, and more aggressive, you're going to bend and do what I say. And I kept going, you know, the faster and the ruder she talked, the slower and the nicer I talked.
I know.
Which isn't even my style.
No, it's not.
But yeah, she thought she was going to bully
Right.
her way through.
And get her buyer's earnest
if you're
money back
louder,
because she
right.
made a mistake.
Right.
And I told her she made a mistake.
Right.
I mean, like, I'm like, you made
But
this
it's
mistake
also
here.
okay. We
but
can
you
fix
want to
it.
blame me. But I'm trying not to blame anybody. I'm just trying to get the mother effing appraisal done on the actual property that your buyer wants to purchase.
The problem is you make a mistake, and all she wanted to do was get her buyer out and get her buyer's money back.
I feel bad for the buyer because I don't
Right.
even believe at this point that the buyer wanted to not close.
Well, that's what I kept telling her was,
I know.
Listen, you got someone who wants to buy a piece of property.
Everything
We got
she
somebody
said,
who wants
right.
to sell it. We can do this. We can still find win-win.
right.
And she was not having it.
No, everything she said was, I want out, I this,
100%.
I that. I mean, in the email exchanges that we had with this woman, she kept taking me out. So it was an agent's deal.
Mm-hmm.
And we're here to support the agents. So when a deal gets hairy, you get lumped in as the
Yeah.
broker, right? Communication, you're the designated broker, get lumped in. And then a lot of times you'll pull
Sure.
me in because I have a vast knowledge
You're
of the
the
compliance,
compliance.
right? So the rules and regulations, what can we say, what can't we say, what forms do we need,
Right.
what don't we need, blah, blah, blah. So you and I, and this agent also has a mentor. So she's one of our newer agents.
With
so
listings.
It goes, with listings, it goes hairy. And so the agent, the mentor, the broker, and the compliance manager are all involved in this conversation at this point. And at one point she goes, I don't understand why you're all talking to me. Mm-hmm. And I'm like, wait a minute, I'm confused. You're mad because we have an entire team of people that are trying to get this to the closing table?
100%.
I don't understand that.
Right.
Like, that behavior means you're not acting above guard there. Like,
I mean something.
I don't know. Anyway, so now you know, FHA appraisal can be invoked until the day of close.
That's right.
What is going on in real estate? Aaron, what happened
was really long.
in the news this week?
That was a good story, though. That was a good one. Okay, in the headlines, first up, Fannie Mae accepts first crypto-backed mortgage product.
So they can put the crypto up instead of the house? That's the way I read that.
They can use their crypto to help get a loan, to secure a loan for their down payment, up to 20% of the loan.
So it can only be used for the down payment. Right now.
But it's not even for the down payment. It's securing the down payment, and it's first of all, crypto is mind blowing to me. You already know that because I'm old.
No. Okay.
Can't we do bars of gold? Why can't we do bars of gold?
Okay, I feel like we need to have some sort of guest that knows crypto because it is becoming a conversation in real estate. And for some reason, it's a big deal. But I don't understand how crypto works either. If I'm being totally honest with you, I know nothing about crypto at all.
It's So I read that article, and I guess it's an okay thing to do, but they're going to charge you. So you have to put up $2.50 for every $1 you use because we all know crypto, it's going to go up and down.
Which I don't understand either.
So-
I do not. I don't want to even have this conversation because I literally only know the words.
But
I
if
know
you
crypto and I know the word blockchain and I know they're connected, but I have no idea what any of those
I figured
things
you
mean.
knew all of it.
Nope.
Well, either way, if you have a client who wants to do this program, it is now acceptable.
But they put their crypto up for collateral.
They're going to
to
pay
get
up.
a loan to make their down payment to purchase their house.
Yeah, and then they're not going to pay PMI because it's an 80% loan, even though you're
paying a loan to somebody else, this company that's issuing these loans, right? What was the name of it? Better or something like that?
Yes, better home and finance.
Yeah.
Yeah. So
So it's like a car loan. You know how you car loan, right? That's how I heard it anyways. I just don't know how you get, I know how to get a car. I don't know how to get crypto.
But it's not really the down payment. You're not cashing it out and using it as a down payment.
No, you're just using it for collateral.
Yeah, so you're paying 100%. So you have an 80% loan and a 20% loan. They combine it all together. So it's like a 100% VA loan.
So it's actually more like taking a loan against your 401k.
Except for because it's I would say imaginary, somebody's going to be writing in because it's not real.
Because it's digital. It's digital.
Okay, because it's digital, and so you have to put it with Coinbase. You can't just have it in your own like wallet.
What the hell is Coinbase?
That's a place where you can store your Bitcoin.
Okay, but Bitcoin is not the only cryptocurrency out there.
So I don't know what all the other cryptos, but so you have to have it there.
Venmo has cryptocurrency
You
now.
cannot have it in your own wallet. So you freeze it. You can no longer buy. You can no longer move it.
Okay, you have to deposit it to somebody else's bank.
Yeah.
Okay, got it.
And so Coinbase, that's the name of
Got
the company. So, and then you're using it to secure it.
Right. So same thing as an FHA
So I was like,
loan.
why can't you use
just
your gold
leave your
bars?
FHA. Well, you can.
Well, no, the reason you can't use your gold bars is because they would have to house those somewhere then. You'd have to take your gold bars, like literal gold bars, and it would cost money. I know, I went down the whole thing because, I don't understand it. And I'm like, now some client's going to ask me about it.
I know, you're not helping me understand it, though,
I was breaking it down.
And if you went down the whole rabbit hole, then why do I still not understand it?
Because our rabbit holes are different. I'm doing dummies for crypto, and you're trying to understand how it works. I'm just trying to have a high-level overview of how this is possible.
So you have the crypto, which we're going to let go of right now, where the crypto came from, right? Because that is the part that boggles my mind. And I'm sure I could understand it if I read it, but you have the crypto already. So if you're taking a $20,000 down payment, which is not, whatever, how much crypto do you have to put up to get that $20,000 down payment?
2.5. So what would that be?
So 50,000?
Yeah.
Right? Is that math right? Did I math
No,
that
that's
math
not
right?
right.
Yeah.
2.5 times 20.
40, and a half of 20 is 50.
You're right, too. Okay, 50,000. So you take
So you have to
$50,000
$50,000 in cryptocurrency, and you transfer it to Coinbase.
where now it's locked.
You
You can't trade it anymore.
earmarked.
Right. It's
Right.
frozen.
Frozen.
Okay.
And then Coinbase, or this company that assumingly would be owned by Coinbase, Better Homes
it's
not Better Homes and Cartons.
Better Homes and
Finance.
Better Homes and Financing. Then writes you a note with that crypto that's now in the Coinbase bank and gives you cash instead of that.
No. There's no cash. It's saying, we have this. Here it is. We're going to secure that $20,000.
Well, there has to be cash somewhere because
There is not.
There has to be, because then how does the seller get the money? Because that's where that money has to go. And the seller don't take crypto at closing.
So here's an example.
It's
Yes, hit us with the example.
As an example.
I'm trying to understand this without going all the way down.
I thought you would totally, I was wrong too. I thought you would be like so in the know.
I don't know anything about crypto.
Well, I don't either. So this is fun. Okay.
Has something to do with blockchains and computers.
We're not going down that.
Okay,
Give the example.
On a $500,000 home, a borrower can pledge $250,000 in Bitcoin and get a $100,000 loan to cover the cash down payment.
Yes, so they give you $100,000 cash to make your down payment.
No.
Yes.
I'm just reading.
No, it's 100%.
You just said it.
You're not
Read
listening.
it.
It's
Read it
100%
again.
loan.
I know. So
The
Annie,
crypto
now,
stays in custody and Better's Coinbase Prime account for the life
I
of
know,
the
but
loan.
for the life of the loan until you've given them back the cash.
Once the loan is repaid.
You still get the cash. When you take a loan from anywhere, you get cash when the loan funds.
You're not getting cash.
Yes, you are.
Read it again.
As an example.
Listen
I
to understand both of us.
Yes, go. I understand it. You listen to understand. Go.
On a $500,000 home, a borrower can pledge $250,000 $100,000 in Bitcoin and get a $100,000 loan to cover the cash down payment.
To cover the cash down payment. That is a lender. Better Homes and
Lending.
lending.
Finance.
Financing. It's a
Okay.
lender. They're writing you a loan, no different than
Yes.
a mortgage broker writes you a loan. And once you've
Got it.
done everything that the
I
mortgage
got
broker
it. I'm on the same
says,
page. I thought you
they
thought
give
they
you
were
the cash.
They're not cashing your Bitcoin. They're
No,
loaning you.
it's
on it.
collateral.
Got it. Agreed.
It's just like a car loan. If I
Misunderstood
own my
what
car,
you were saying.
yes, right. So if I own my car and I go and
Yeah.
rent it, and then they give me the cash back, whatever I spend that cash on is my choice with a car loan. With this particular one,
Got it. We're on the same
and I
page.
think that the big news headline was that Fannie and Freddie would not insure those mortgages before, because this company's been doing that for a while.
Right.
But Fannie and Freddie were not insuring those mortgages. So now Fannie
Mm-hmm.
and Freddie will insure those mortgages. So if you've got a substantial amount of crypto, you've now unlocked a new way to come up
Exactly.
with a down payment.
Yes.
That makes sense now.
Yes.
I don't have to know anything about crypto.
No. Except for
I
it's
do
still
want to know
mind-boggling.
about
But
crypto,
yes.
but
But you do not.
as
right.
a realtor, I don't need to know about crypto. I just need to know that people can use their cryptocurrency that they currently
secure
have
their down payment.
to secure a loan for a down payment,
Yep.
and Fannie is okay with
Yes.
that. That's great news.
Yes.
It opens up more opportunities for people, I would think. Do you have cryptocurrency, Aaron?
Now it's also
No.
yeah, and now it's a higher loan too. It's like a 0.5% to 1.5% higher because there is a little more
It
paperwork
does-
and risk
right.
involved.
It does say
So
that
you got to want to.
So the APR on the loan is, but it's separate from your mortgage. That's what the way I read that article is. You end up with two loans.
Yes.
Very similarly to when you utilize MHDC funds, which is Missouri Housing Department Conservation, something like that.
I don't think that's right.
I don't know. Anyways, the MHDC acronym is the State Department that
Yeah.
has funds to help first-time home
Right.
buyers. And so if you're a first-time home buyer, you can qualify for MHDC help, which they'll either make your down payment for you, but it's a loan. It's not just giving you the money.
No.
It's a loan. It's a loan that there's no payment on
It's not our topic.
for 5 years, but it's the same as the crypto loan. So just like you can use MHTC, and you don't have to be a first-time home buyer, you can utilize this service, but there's a loan tied to your crypto that you have to pay off.
Right.
So you can't sell that crypto, exercise it.
Well, yeah, it's frozen.
It is exactly the same as a 401k loan. Then you have a 401k portfolio, which you direct the investment on. If you want to make a purchase of a home, 401ks and Fannie and Freddie allow you to take a loan against the value of your 401k. And the 401k companies have percentages, just like 2.5%, that you're allowed to take. And they divest you from the market, and they send you that cash to make the down payment on your purchase, and then you have to pay that back in a
Right.
term loan. That works the same way. So it's exactly the same as taking a 401k loan. It's just a different asset that you're putting up for collateral.
I think there's a couple differences, but I can't say what they are.
What are the
I
differences?
don't know.
I mean, it's
Ask that.
so
You could ask that question.
the regulations
in
are going
there.
to be different. Like
Yeah.
the repayment terms, and to your point, 2.5%, you can borrow more than 50% of your 401k to make a housing down payment, I believe.
Yeah,
And
it
still
depends
be
on-
okay.
yeah.
It just depends on the balance of your 401k.
right, and your 401k rules.
Right. And this has their own rules too. So the nitty gritty details are,
Yeah.
but high level
But-
bird's eye view, it's exactly the same. You can
yes.
borrow against your 401k. You can now borrow against your crypto.
Yep.
You can borrow from the state if you qualify.
You can borrow from your grandma.
Yeah. That's the best way to do it, personally.
God rest her soul.
Yeah.
All right, there you go.
Okay.
I like
next.
that. I'm excited. I like to see new opportunities
Yes,
for people.
it does. Yeah.
Especially that's going to open up a lot of opportunities for younger people too.
That's exactly what I said.
Right.
Which I'm like, millennials, they got into that crypto for whatever
Right.
reason. I was not one of them.
And they don't have to
but-
cash it out to buy a house,
No,
which is
right,
what
which
they
is
had to before
yes,
this. Yep.
They do not like
Right.
to cash their crypto out
Yep.
because of the blockchain.
Whatever that is.
All right, what else you got?
Okay. So NAR settles to Corey. It's settled. It's huge
Good.
news.
Great.
It's settled.
So happy.
commission case for $52.25 million. NAR will contribute $52.25 million to opt into the Takori homebuyer settlement and says the release is intended to cover Batten claims.
So the buy,
It's actually good news.
not really, because it costs you and I $52.25 million, our share of it.
But it could cost more. Well, that's the
Sure.
reason they did it was to be done with it.
I understand. Same reason they settled the Sitzer case.
Well, yeah, because they got caught off guard on that one, though. They thought
This is just the opposite side of that case. This is the buyer's side of the case.
but they voluntarily put themselves in this one and said, let's settle it. Because they're thinking that it could have cost us a whole lot more, and now we're done.
No. They didn't voluntarily put themselves in there. They're a named defendant in this case.
Are you sure?
Read it in the article.
Well, either way, we could be done with this now.
We
At least
have
for
to
this
talk about it
one.
anymore.
Right.
Divided by 3 million members.
But it could have been worse.
I know it could have been worse.
And it probably would have been.
But it doesn't matter whether it's good or bad. It's dependent on what it is. Not what it could have been.
There's a reason they did it.
Yeah, because they had no choice. They're going to go bankrupt. They could not afford to litigate another case.
Right.
Cost you and I at least $20 each, just so you know.
I'm okay with that. I just want to be done with it.
I do too, but I'm just, saying. I am happy that there's no more regulations that we have to do. Like, that was one thing that I was
Now we just
thrilled
have to do
about
our
is
jobs.
We settled, and the Sitzer regulations that went into effect in July are acceptable for the buyer's side to move on with our lives.
Yes, let's just
We've
move on.
already moved on. That's why I banged
I know.
my head against the
I know, but that's all right. That's all right.
Moving on.
All right.
What the floop?
What the floop?
What the floop happened to you this week, Annie?
Well, it happened to me last week. And it goes into
You're going to draw up the FHA story again.
No, I'm
aren't you?
not. Oh yeah, I am. It goes into that because I got drug in
Yeah.
voluntarily.
Right.
Kind of like
That's
NAR
what we
into the
do.
settlement. I
Right.
put myself in.
Right.
So this same house that we were talking about earlier, the same property, was appraised without 5 lots.
Right. Purchase was for 6.
I really don't
Total.
care to go into why it wasn't that way. It doesn't even matter. But when we realized it was that way,
Doesn't matter how the appraisal got there.
So it goes back to the lender. The information goes back and says, hey, we need to have this property reappraised because they appraised the wrong property. And so the lender says, okay, well, I had it reappraised and it's exactly the same. And so
you said, what the floop are you talking about?
So I tried not to step in because we have very qualified agents, and but then it just comes down to that last point of everybody was saying sorry,
Yeah.
and so I called the lender, and I said, hi. I was very very nice, and I said,
Hi.
hey, help me understand this situation, and he says, yeah, man, it's crazy, but that's what they said. I said, so I've got to be super clear on this because I have a duty to my client.
And what you're telling me is
You're telling me that 5 lots in the city of St. Louis have 0 value.
not to mention 5 lots in the city of St. Louis that are cleared and level and have utilities
Gorgeous.
on them already.
I didn't even have to say that, but I just.
But I'm just saying, I know you didn't say
for
that.
backup information.
That's why I said not to mention.
And he says, yeah, I know. And so I'm glad we're not on Zoom because that was probably my face. And I said,
I was watching you have this conversation. This was your face. Are you ready for it? When he said that to you, you went.
I said, so, and I just kept going back. So you and I are clear. You're telling me that those are free. They're worth nothing. And he goes, yeah, that doesn't really make sense, does it?
No.
And
it
I said,
sure
no.
doesn't.
And I said, so
Actually, what you said to him, because this is one of my favorite quotes from you last week. You said, just so we're clear, you're telling me that 5 fairly large batches of dirt, which they're making no more of, have no value. That's what you're telling me? And I quote Annie Calloway.
So he's like, I don't know what you want me to do. And I said, well, what I want you to do is get us an accurate appraisal. I said, first of all, at this point,
I think you knew that already.
At this
Why
point-
are you saying that?
yeah. Yeah. So anyway, he said, well, I don't think that that's going to happen. And I'm like, well, can you put me on a 3-way call? And I did. You remember what I said then? Because I know you laughed out loud.
I don't.
I said,
right
I'll be.
now.
I said, I promise I'll be.
Oh,
nice.
you did. I'm
not gonna yell at anybody.
You go, I'm happy to help you. Talk to whoever you need to talk to at your company, and I'll be nice to them. I promise.
I thought it was being nice to him. But he kept saying it. And I kept thinking, my God.
Stop saying it.
Yeah. And he was just okay. And I said, so you're okay with it?
I know
said,
at
so
one point you asked him, you said,
if this was your land.
Yeah.
And I did. I said, so if this was your land, you would just accept this as the answer.
And he
you would be
went-
like, oh, okay, I'll just give you this for free.
5 lots, which we ran the comps on independently of the
Right.
one lot, and it was like $50,000 to $75,000
The whole thing.
if we sold them separately.
Right. Yeah, they were anywhere from $7,000 to $15,000 per lot. Do the math.
Right.
Our client was still open to whatever this appraisal was, and
Selling
possibly
the one lot with the building.
we were open to everything. They were open to nothing. Win-win. They just wanted to say,
Well, it
this
isn't
is
even
it.
that. It's what the floop with the lender. Like, if you're writing a loan for a piece of property that is supposed to be secured by the value inherent in the property, and you tell me that 5 lots or a large majority of the land
Oh, no.
that's coming with the purchase has no value at all, your license should be
Okay.
revoked.
No. I forgot what else he said. Do you know what he said?
What?
Okay, I swear I'm telling the truth and the whole truth and nothing but the truth. He said to me, well, we can't find any comps. We told you to send them. And I said, oh my God. I go, so you're going to take whatever I send? Because I could send you something then.
Right.
But you're not gonna take what I
is that
said?
gonna do? The whole thing is nobody was listening to us say, this is not the property.
Nobody was taking care of their client.
Exactly.
They weren't taking care. Their client's already done inspections, and
they're
she's
gonna
moving.
I as the compliance manager of this brokerage, if we were on the other side of that transaction, my fucking head, excuse my French, but
Everybody-
it would have been popped up and spinning around.
Here's the problem. Everybody was covering their own ass. And I was saying, listen, there were some mistakes made across the board.
It doesn't, yeah.
That's the past. It doesn't matter. You have a client that still wants to buy it. I have a client who still wants to sell it.
And all we have to do.
And all you people are digging your heels in because you don't want to look bad.
Okay, so yes, so they all dig their heels in, and to bring this to a finish,
Finally.
this whole story for the episode, I ended up getting through our title company, the seller's title company. I ended up having our title representative contact their title representative to get the title commitment updated and get that over to the lender, and get all of the docs drawn that we needed to close for the seller within 48 hours of actually trying. And the seller went to the closing company and closed the day he was supposed to. The buyer didn't show up, and I asked the agent on the other side 4 different times, so what's your plan for closing? Would you like to extend closing by a week so that your buyer has time to get the appraisal redone and get their loan approved before so they can pay for it? Or do you want to just not respond one more time and let your client default on the contract, which is what she ended up doing?
I know.
It's sad. It makes me angry. Like, why? What the fluke?
So my what the fluke for today though was a lender telling me that 5 lots had no value.
I can't. There was so many. But
you know
my
what?
mind was.
We're now moving on.
I know it's.
We're back on the market.
It's fun to tell the story. It's not fun when you're living it. It's fun to tell the story after the fact, which is how it always is. So, any old who. It's been a fun one. See you next week.
Bye.
All right, that's a wrap on another week of chaos, closings, and questionable decisions.
If this episode made you laugh, think, or text your real estate bestie like, girl, this is us, do us a favor.
Hit that subscribe button, leave a quick review, follow us on socials, or send us your own unhinged real estate stories. Seriously, we want to share them.
And hey, don't just survive this week. Get out there and build your business.
You've got everything it takes.
We'll be back next week with more chaos and more clarity.
Until then,
Keep waking up to win.